Good afternoon, traders. Today is Tuesday, January the 9th, and we have a live session today, as well as some updates to our spreadsheet and a couple of updates to the overall trading plan, which is all incorporated into the new version of the spreadsheet. So it might take a little bit longer than our usual live trading session, but it's going to be very interesting, and stick around until the end. So first, we're going to start with a semi-hedge. I was talking about that in my Discord. Basically what it is, we're doing a little small semi-hedge that's automatically executed at the time of putting the new trade on. This is very important because it's much easier to do it when it's systematic, when it's part of the trade, when you don't have to think about it separately, like, oh, I have to go and do a hedge on such and such day, or figure out how much to spend on that and what to do. This is much simpler. You do it at the time of the putting on the trade, and then you just add on a small semi-hedge. And basically what it is, it's closing the put debit spread in the future. I'm sorry, not put debit spread, but the short strike of the put debit spread in the future. So we put a good thing cancel order, and we have the predetermined cost. We just put it on when we put the trade, and we let it go. And we account for that cost beforehand, so that nothing changes as far as our yearly target return or anything like that. So we'll go a little bit over the spreadsheet just to show you how that looks like, and then we'll do the mechanics afterwards. But before we do that, we'll talk about some other additions to the spreadsheet, because what I did this time, I added a new main sheet. So this is the old one. I've added a new main sheet that we'll go over. It's very similar to this one, but has a little additions or little changes. It'll help you with scheduling the trades and with sizing. And with sizing, we have another tab here that will show you, based on your net lick, how you should be sizing the trade, and then the spreadsheet will tell you how often to put it on. And I'll go into more details a little bit later. So basically here, there's a new, let me just show you here, PDS short harvest. And this is where we put the amount that we're going to spend per hedge every time we do it. And right now I have it set at 3% of the premium collected. And I like this to be attached to the premium collected as opposed to the net lick. So it's very dynamic, and it's tied to the overall performance. It's taken out of the premium capture rate. So if you start with 27, the formula will then take out the 3%. If you put 4% here, it'll take 4%, whatever it is. But we'll start with 3% because that's probably close to being an optimal spend for this hedge. We don't want to be overspending, because this particular hedge will get executed very rarely, and if we continue to overpay, it's going to drag the performance. Now, if we underpay as well, it's not going to be good, because we're going to be throwing money away continuously. So we have to find a sweet spot, and it's probably in the neighborhood of 3%. If it ends up being a little bit higher, maybe we can move on towards 4% later on, but we'll see the performance and see over a long period of time what works best. But 3% is certainly in the ballpark. So the mechanics are very simple. Once you put the new trade on, which means putting an ES naked put and a couple of put debit spreads in MES, you take 3% of the collected credit, and you put a good till cancel order for your short for that amount. And we'll do that today when we do the live trade. We'll do that. Now, keep in mind, this is not a full-blown black swan hedge or anything of that nature. This is designed to help us when the market pulls back rapidly, 6, 7, 8%, and we have to start closing some losing trades. This will alleviate some buying power issues. It will bring some profit in to offset the losses, but it's not gonna help you in case of a major black swan event. For that, we need to get out of the way. We need to use our stop losses, and you need to get out of the way before we get hurt more than we plan. Keep that in mind. This is not a license to be putting on more trades because you have some kind of a hedge. So that's the first part. Before we move on to putting a trade, we're going to talk about the new scheduling tool, and then I'll show you that in action. And the main idea here is that instead of trying to fit the trade into our schedule, we are fitting the schedule automatically to fit the optimal trade that we can get here on the sizing tab. So, for example, this is based on the net lick of your account. And keep in mind, this is not exactly precise. There is a little bit of overlap, probably as you move from 7,500 to 12,500, you can start moving on towards 5 MESs here on naked puts. So it doesn't have to be exactly precise, but this is a good starting guideline. So if you just stick to this, you will be pretty close to optimal. Ideally, you would like to be over 25,000 to be able to put one ES naked put and two MES PDSs at 75 wide. And this is much more beneficial than doing the MESs because of the better liquidity, smaller commissions and fees, better execution. But you do need 25,000 roughly or more. And at 25,000, you would probably be putting a trade less frequent than once per week. It would probably be in the neighborhood of, just under once every 2 weeks, so twice a month or so. And then as you move on, you will just continue putting the trade in the as is, the structure, and then the spreadsheet will tell you when your next trade should be put on in order to keep everything proportionally spread around to hit your overall target. And you can see here that if you start with a lower account, like a 7,500 or in that neighborhood, instead of doing one ES, you would do 3 MES puts and combine them with one MES PDS with around 50 wide. Sometimes, occasionally, depending on pricing, you might be able to get to squeeze in on 75 wide instead of 50, but you can also move around deltas a little bit just to get where you want to be. But this is just an overall ballpark what you aiming for. Likewise, if your account is increasing and you're getting 12, 13, 14,000, you would move basically to half the size of one ES, and half the size would be doing 5 MESs naked puts with one MES put debit spread. And then once your account is large enough that you can consider portfolio margin, you can look into maybe moving towards SPX and combining that with XSP or SPY put debit spreads. And then obviously the width, because of the way it works, the widths are smaller nominally, but the amount of money it's double. Okay, so that's on that. So basically, just to note, these numbers here assume that you already have a full book going on at 20% allocation for put debit spreads. But as a note right here, you should be spending a little bit more money on your PDSs in the first 3 months generally until you build a full book around 30%. So your profits might suffer slightly, but you will be better protected in case of market, because market can pull back at any time, and it would be unfortunate if it pulls back when you're just starting to build your campaign. So you want to be ready. There is no rush in this. Thereafter 20%, as I noted here. So basically, the first step for anybody to do would be to take a look at this here, decide what the optimal trade is, and then this is the trade you put on, and the spreadsheet will do the rest. So let's go to the platform, and let's say I want to put a trade on, and I purposely didn't show you the main sheet yet. I want to first put a trade on and then show you what that does to the spreadsheet. Okay, so let's go here and take a look at ES. My account is 53,000 and change, so I can go ahead and do the ES trade, and we go right here. So we aim to around 90 days, but we don't want to go much lower. 79, it's already a little bit too short. So 101, it's probably where I want to be. And ideally, we're looking for 8 delta. We can go 7 or 9 if needed, but in this particular case, there is no need. 18.5, 925 is what the market is giving us. It's questionable whether we can get that, or we might have to go down a quarter, but let's try and close it. No, it looks like we're gonna have to go down just a little bit. It is right here. Let's replace. Now this should get filled real quick. Yeah, that's fine. Now we spent 1825 for this, and then using our little shortcut, we know that we can, in order to spend 20%, we can spend around 1825 on each put debit spread in MES, which will give us 20%. And since we're still not at a fully developed book, we should be spending more. So maybe not 30%, but somewhere around 25% or so. However, I'm introducing something else as well, and this is once we go over the first month or so, instead of putting on, let's say, a third put debit spread, we're going to use this extra money that's allocated over 20%, we're going to use that to close some of the shorts that we put on previously, because that gives us a little bit better bang for our buck in these first few months. So we can go 101 or 79. I think there's not going to be 25. Yeah, there's no 25 strikes here, and we want to do 75, so we can go to 79. Not ideal, but it's not a big deal if we go every now and then. If we go a little bit, a couple of weeks shorter, 2-3 weeks shorter on our put debit spread, it doesn't make a huge difference. But let's see how much would a 75 cost us here. It's 1850, so that's pretty close, and we don't want to go down here because we already have this here, so we might as well just go ahead and get 2 of these. We're still okay to spend a little bit more money on the put debit spreads as it is. So let's see if we'll probably have to up it as well, but let's try and just close this one real quick. Oh, good. Actually, we got a fill at 18, so that's perfect. So we spent 18 on that. So if you take a look here what we did, we collected 1825, and then we spent 18 here, so 2 times. So that leaves us with a little bit more to spend to get to our 26% or so. We can spend somewhere around roughly $9-10 dollars in MES, obviously with a 5 multiplier, and use that to close some of these shorts right here. So let's go with the shorter ones here. We have 3 of them here. They still have 22 days to go. They cost $1.75 each. So if we close them somewhere close to 2, so we can close all of them and see what that does to us. That will increase our buying power by 1,400 here. It will give us a little bit negative delta. So we'll see. Let's try and close it for 175. But if we pay up a little bit, it's not a big deal. Let's go here, replace. Let's just go here and close it. So 185 times 3, that's, just under 6. So we still have, around 3 or so that we can spend and be in within our limits. So let's see what else can we close. Can we do this one is at 130 or so. This one is a little bit more. Let's go ahead and do this one and close position. This one is not going to give us as much buying power relief, but 340. Let's do that. All right, that's done. So is there anything else cheap that we can close? 287, we spent a little bit down there. No, yeah, I think this is enough for now. Now we're going to go back to the spreadsheet, record all of this, and then we'll take a look at the new main tab in the spreadsheet. Before we do that, if you find this video useful, please like it, subscribe it. It really does help for the Google algorithm, and I would appreciate if you do that. And let's go and take a look at the naked puts. So first we go here and put 40. This was 1 ES 9/1/24. The strike, I think it was 4,200, but we'll double check that for sure. And let's go 42 for 1825. Let's see, 42 for 1825. And I think it was 101. Was it? It was 101. Okay. And we did one of them, and that's it. So that one is done. On put debit spreads, 41 we did MES, and it's 9/1/24. The strikes were 475, and then 4675, and this was 79 days. And we paid 18 for each, and we did 2 of them. Now, for the trailing PDS cost, we have to include what we spent on that and we have to actually put the MES, even though it's not a put debit spread, we're not going to capture the strikes and all of that, but we'll just do the 9/1/24, and here we let's take a total here. We spent 135 and 3 times this, so this is okay, so we spent 6.9 on this minus 6.9, and this is all together combined. And let's see, this because we want this cost to be transferred over to the main sheet. Now, here we go to the new updated main sheet. A lot of things are the same. Everything here in the green is the same. Nothing changed there. But we're no longer saying how many trades per week we want to do. We just leave that to the spreadsheet. Here for the reference and for the formulas, I have the yearly target premium sold. This is a yearly target for us in order to achieve this goal given these parameters here, okay? And then this is divided by 52 for the weekly target. Again, we don't have to do that. This is just for reference for us to see how we're going. And then this is a daily target premium. But keep in mind that the formula here is calculating 250 days to account for the holidays and whatnot. So it's a little bit, it's not 5 times this, it's a little just slightly off, but it doesn't really matter. Here, this number, so once we take this number here and we calculate everything, you can see here the 913 naked put was the last collected premium right here. The spreadsheet will take that, will figure out everything else, and will tell us that the next trade for us is Tuesday, January the 16th. Now, should this, let's just do an experiment here. Let's just say that we, instead of collecting 1820, let's just say we collected, oh, I don't know, let's say 23. That would, let's make it a bit bigger difference just to, okay, so 12.5, if you go back to the main, you can see now, because we collected a little bit more money, the spreadsheet is moving us to the next day in order to spread the premium and the trades around properly. So to keep us on track to achieve our goals without overloading or doing too much tinkering. So it's easy as that. We go back to 18, I think we said. No, was it? Oh, I got distracted. Was it 1825? Sorry, 25. Okay. Here, I've changed this these numbers here to, instead of to follow this week or last 4 weeks, it's just gonna automatically follow whatever you put in the days trailing. So here, if you wanna, as a default, I put in 30, so you can follow the trailing 30 days for everything. This is for your premium, this is for your PDS cost, this is for your ratios. And if you want to quickly see how you're doing over the longer period of time, you just change this to 60 and it'll quickly tell you how you're doing, right? Or you can go for a shorter period of time and see how you're doing. As you can see, in the last 10 days, our cost premium ratio is at 23%. Over the last 30 days, it's a little bit higher. This is to be expected as we're moving towards the 20%. Now, you can see how everything is accounted for. We have now included the cost of our little hedge. Now, let's see what this little hedge did for us as far as just a graph here. Let's take a look. First of all, let's refresh this here. Okay, so even though we added a new trade, which would normally bring in around 7-8%, because we closed those shorts, we only went up by 3%. So this is really good for your buying power control. And then also it should have helped here build this hump up a little bit, because now you have some naked long puts here. As you can see here, we're building this protection. Now, keep in mind, this is, don't get distracted or misled with these graphs. They're taking into consideration expiration for all of your trades and then combine them all into a single graph. And this is not what's really happening, because you would have different expirations in your account. And the volatility would be going through the roof if you were getting anywhere here. So don't be hoping to get this here. This here just helps you have a stronger hedge and allows you to get out of the market's way if it's heading south in a hurry. So the higher this is, the more protection you have, but this is not your target here. You don't want the market to come here. Now, we still didn't do one thing, and that's putting on the hedge that we talked about earlier. So as you recall, we said 3%. So we collected $913, and 3% of that would be like $27, $28. But if we have a little shortcut to calculate this quickly, so let's go back to the platform. And if you recall, we collected 1825 on our ES. Automatically, if you take 18 in MES, that's cutting it by 10. So what we need to do is we need to put 1.5% to each of the put debit spreads, shorts of the put debit spreads. So we had 18, so 18 plus half of 18, so plus 9, it's 27. So we should pay around 2.7. So if we go to the MES right here, the one that we put on today, let's actually, before we do that, let's just group these things, and this one is 41. Then we're gonna take the shorts. We're gonna say close position. We're gonna put it to good till canceled. We're gonna change this to 2.7. We're gonna check on this. So we're paying 2.7 times 2, so 2.7 for each, and that should be 1.5% roughly for each, or 3%. As you remember, $28. So that's roughly in the neighborhood of 18 plus 9, right? 27 roughly. Okay, so we go ahead and do this, and we just leave this be, and we don't have to worry about it. Once it gets to that point, it'll get automatically closed. And then also, while I have you here, let's just go ahead and mark this trade as 40. And then let's also put a good close position at 60%. We'll go ahead here, and then we change it good till cancel. And now we're all set. We don't have to worry about this until next Tuesday, unless something happens in the market and we really need to act quickly. But otherwise, we're good to go for another week. As you can see, this helps you. This new spreadsheet helps you make it even more automated decisions. You're not trying to fit the, let's say, like before you would go and go for 8% and then try to hit certain target, which nothing wrong with that. I just think this is a little bit smoother. You just take the best trade that's most optimal for your account, you execute it, and then the spreadsheet simply takes that into account. Now, for smaller accounts, it might be better to stick with the old sheet, and whoever else would like to stick with the old way, nothing wrong with that. This is why I'm leaving this all main tab in the spreadsheet. So whoever wants to use the old one, they can do that. And, we'll discuss and see how it goes in the future, maybe do more modifications, but I think it's pretty good as it is now. I think I covered everything. If you think I missed something, or if you have any questions, put them down in the comments, but definitely come to my Discord. Link is in the description. We will be able to answer more questions. You'll be able to get your spreadsheet here. And that's it. I hope you liked it. Don't forget to subscribe, and I'll see you soon. Thank you. Bye.